All right, let's dive into a pretty wild story coming out of the German markets in 2025. Turns out, it was a fantastic year for investors. And the numbers behind that success tell us a really compelling story about strategy and maybe even more importantly, about balance. So, what's the big headline here? Well, when you look at the analysis of the German markets for 2025, something really remarkable jumps out about how everyday investors did. And it all boils down to this one single powerful number, almost 80%. I mean, that's a number that's high enough in any market to make you stop and just ask, what on earth was going on here? That's right. Almost 80% of investors in Germany actually saw their portfolios grow in 2025. In the world of investing where nothing is ever guaranteed, a success rate that high is just incredible. It really tells you something special was happening. But hang on, because growth can mean a whole lot of different things, right? A 1% gain is, well, it's totally different from a 10% gain. So to really get the whole story, we've got to break that 80% figure down and take a closer look at the numbers. And this chart is where it gets really interesting. Look at this. It's not just that most people saw growth, it's how much growth they saw. The biggest single chunk of this pie, nearly 55%, represents people who had strong growth. We're talking returns over 7%. That is a massive portion of the market having a seriously good year. Let's look at this another way, just to make it super clear. When put the two positive growth groups side by side, the picture couldn't be clearer. That strong growth category, it's more than double the size of the moderate growth one. So the key here isn't just that people made money, it's that a clear majority of them saw really significant returns. So, of course, this leads us to the big question. Numbers this good, they don't just pop out of thin air. There's got to be a reason, right? Some kind of clue in the strategy that led to all this success. How did they do it? What were all these successful investors actually doing? I mean, what was the secret sauce? What kind of tools were they using to get these kinds of results? Well, the source material gives us a huge clue right here in this quote from Christian Wohlmuth. He says, structured securities enable investors to adopt both offensive and, more importantly, defensive portfolio strategies. Now, that one sentence points us directly to the tools and, even more, the mindset these investors were using. Okay, so let's piece that together. What exactly are structured securities, based just on that quote? Well, they're basically investment tools that let you do two things at once. You can play offense, that's the growth-seeking part, and you can also play defense, which is all about protecting your capital. It seems like that combination, that's the key. Offense meets defense. Honestly, that's the heart of this whole story. It suggests that the success we're seeing in the data wasn't about choosing one approach, it was about skillfully blending them both together. And this lays it out perfectly. On one side, you've got your offensive strategies. That's all about going for it, capturing growth, aiming for those big returns we saw in the data. But then, on the other side, you have your defensive strategies, and these are just as crucial. They're about protecting what you've got and managing risk when the market gets a little crazy. And it looks like the real magic in 2025 was how investors managed to do both. So when you boil it all down, what's the big takeaway? The main thing to remember is that a really successful portfolio isn't just about chasing growth. It's not just about playing offense all the time. It's about finding that perfect, sophisticated balance between grabbing those gains and protecting your downside. So this amazing year for German investors wasn't about some secret trick. It was about a philosophy of balance. It's this powerful reminder that real strength in a portfolio comes from being able to seize opportunities and weather storms. And that kind of leaves us with a final thought for ourselves. When you look at your own approach, is your portfolio built to both attack and defend? That's the real question this whole story leaves us with.